Hey guys, welcome back to my channel. Today in this video, we'll be talking about tips for long-term dividend investing. If you're new here, my name is Stan Lopez, so please consider subscribing if you're into finance and investing in the stock market. My first tip is start investing today. I personally started investing back in January. You want to start investing today. The reason why you want to start investing today is because you don't want your money to just sit in the bank. You don't want your money to sit in the bank is because the bank only gives you a 0.01% return on your investment. You don't want to save that money, all right? So don't be a saver, invest your money in the stock market. Another reason why is because you want your money to work for you. Have you heard of passive income? That's right. Passive income is one of the best ways to make your money work for you. When you let your money sit in the bank, it's literally just sitting there. The only people that's making money off of your money is the banks. So I'm not sure if you knew this, but when the money sits in your bank account overnight, what the banks do is they sweep everyone's accounts and they take that money and they invest it in the market. So when they make their returns, they're giving you a 0.01% on that investment. That doesn't make any sense. Now, also, another reason why you want to start investing today is because you want your money to give you a return, right? That's why you hear people invest in the stock market, they invest in real estate, they invest in other businesses that will make and generate them money on that initial investment. Remember, start investing your money today. So that is my first tip. Tip number 2, invest in companies you love. Do some research, invest in the companies that you guys know about and not just because someone on the internet or someone in your family has told you about it. Do your what we call DD. So what DD is due diligence. You want to make sure that the companies that you invest in are companies that you feel are going to grow in your portfolio or are going to grow over time. When I typically look at companies, what I like to do first is I like to look at the charts. If you don't know how to chart read, you can always figure that out by taking some courses or watching some, posts on YouTube. There's simple, basic ways to understand how to look at charts. Another way I like to look at the companies is based on what they do, what their background is, how often are they paying their dividends, is their dividend growth over, X amount of years. And there's tools online that you can actually see based on these companies for all these metrics. I don't like to overcomplicate things. I just like to keep it simple. So I also look at price action on the long-term charts. So I like to see the 52-week high versus the 52-week low, where the position is, and how long have they been in business. So these are the typical metrics that I typically like to look at when I do my due diligence on these companies before I invest in them. I don't make things complicated, so I just do my basic research. I look at the stocks. If I'm interested in the company and if I like what I see based on their dividend yields, then I'll consider it. Also, base it on your budget. If you don't have a large budget and you just have a small amount, look into companies that are within your means. Don't invest in something that is worth $100 when you can find something under 50 or under 30 or under even 10, because there's many stocks out there that are good value. It just depends on when you want to get them. So back to do your own due diligence. So do your own due diligence. Man, why is that so hard to say? Anyways, do your own due diligence. Make sure you do some research before you invest in these companies. A lot of times you don't want to buy companies, that are just on the news. You want to make sure that you're buying at a good value. All right, so tip number 3 is buy and hold. When you invest in these companies, make sure that when you buy them, do not sell them. This is a long-term game. Remember that. Hold your position. Don't just buy and then sell tomorrow. You're not day trading, you're long-term investing. That's the reason why you're watching this video, is because you are into long-term investing. Now, when I buy and hold, I typically like to hold these stocks for a few months, maybe even to a few years. It just depends on what your strategy is. In this video, we're talking about dividend investing. So basically, when companies make a profit, they're going to share their profits with you as a shareholder. And what you do with those is you want to reinvest, right? So you want to buy and hold these companies for long term. Hold these companies for a long time. Remember, you are investing for the long term game. When you buy these companies, expect to hold them for 6 months minimum. When I invest in these companies, I like to buy the shares and average down. So, you can't time the market. You never know when the market is going to go up. You never know when the market's going to go down. So this leads me to tip number 4. Average cost down. You want to average cost down on your positions over time, right? When you buy a position, let's say at $10, and the following month you see it down to $5. I mean, typically that doesn't really happen, but sometimes it does. But what you want to do is you want to get at a lower price, and that'll bring your $10 stock down to about $7.50. You want to get your position lower than what you bought it originally. So when it's time for the market to have a rally, you're going to actually make those gains. So let me just give you an example of average cost down. If you have been following me for the last few weeks, you've noticed that my portfolio has had a tremendous amount of gains, because what I did was I bought more shares when the market was at its 52-week low. What I started doing was buying shares lower than what I originally had bought them for. So when the market rallies like what it has been doing in the last few weeks, I've increased my gains, and I've also increased my portfolio by doing that. So average cost down is another strategy that you want to do when you invest long term. Let me ask you this. Do you get emotional when you invest? Do you get emotional when you put your money into the stock market? Don't worry. That's one of the common factors of investing, especially as a beginner. So that leads me to tip number 5. Don't get emotional. Remember, it's a marathon, not a race. When investing, you want to make sure that you are investing money that you can afford to lose. Do not invest money that you are going to be spending on rent, on food, or something that you have to use for your daily living. You want to make sure that the money that you invest is the money that you are willing to lose tomorrow or in a few weeks if something was to happen. You don't want to invest in money that you need immediately. Also, when you are investing, you want to make sure that the money that you have in your portfolio, you are going to be keeping there for a few months to even a year. So keep that in mind. Do not get emotional. Emotional is a fear that happens every day with a lot of people when it comes to investing. The reason being is because you don't want to lose money. I mean, I don't want to lose money. I still get scared once in a while when I day trade, but we're not talking about day trading. We're talking about long-term investing. So it's okay to be emotional, but do not get emotional when you are investing. Once you put your money in, let that money work for you. Just remember, don't regret when you invest in the stock market. The money that you are investing is for your future. It's going to be working for you. When you are emotional, it clouds your judgment. You're thinking about all these other things about, is the stock market going to go up? Is this stock going to go down? It's a typical emotional roller coaster. And that's one of the biggest downfalls with investing, is letting your emotions come into play. All right, so that was tip number 5. Okay, so tip number 6 is reinvest your profits. I love this tip. I personally reinvest all of the money that I've earned so far from all my dividends from these companies that I've earned over time. I haven't taken out anything from my portfolio, and what I've been doing is every time I've earned interest from these companies, all I do is I put it back into the market. So that's a great thing about reinvesting your profits, is compound interest. If you're not familiar with compound interest, it's basically where you earn profits and you take those profits and you add it to your original principal. That's something that I like to do, is reinvest my profits. I don't like to withdraw it. I just take it and then I reinvest it back into the market. Just a quick recap on my long-term investing tips. Number 1, start investing today. Number 2, invest in companies you love. Number 3, buy and hold. Number 4, average cost down. Number 5, don't get emotional. Number 6, reinvest your profits. Now, if you found any value in this video, please do me a favor, comment below and let me know what you thought. Any feedback would be appreciated. Alright guys, so if you guys did find some value in this video, please do me a favor, consider subscribing, hit that thumbs up button, and please share this video for anybody that's into investing or wanting to learn about dividends or the stock market. I would really appreciate it. And for everyone that's subscribed to my channel, thank you for the love, thank you for the support, and I'll see you guys on the next video. Peace.